Hey everybody, Michael St.Claire here with Homeside Financial. I'm a residential mortgage professional, and I wanted to share with you guys today as far as how to fill out a mortgage application correctly. Now, whether you're filling this out on a paper form or if you're filling this out online, the landscape of the first-time home buyer or even subsequent buyer has changed. And what has really attributed to a lot of that change is how they're getting paid or what they do for income. Also combined with that is the rate of bankruptcies, short sales, and foreclosures from 2008. So I wanted to share with you guys how to correctly fill out a mortgage application so that you can get the most precise answers from a financial institution quickly and ultimately have a smooth underwriting process. All right, guys. So as you guys can see in front of us here, we have a mortgage application, at least the first page of it. Now, there are a couple different tabs here. If someone was interested in jumping ahead, they could to find out what they are, but we're going to go through each and every one of these today. Now, as I mentioned before, filling out a mortgage application is going to take anywhere from 4 to 5 minutes. You as a consumer, you're already going to know your name, your last name, things of that nature. However, if these sections are not filled out correctly, these are where our delays can come from. So let's start with examples. A name sounds pretty simple. An example, my name is Michael. Sometimes people call me Mike, and a lot of my family would have called me Mikey. But I'm not putting Mike or Mikey on this section here. I'm putting my legal first name. And the same thing for my last name. Now, my last name does have a period in the name, and I would still list that period there. Even if you have a dash or if your name is hyphenated, you would want to list it. So an example of that would be if of a Hispanic or Latin culture, sometimes it's very common to take a mother's last name as a middle name and hyphenate it with the father's last name or just add it to. So if it was an example would be Reyes Hernandez, you'd want to list Reyes Hernandez. So essentially, whatever's on your Social Security card and or driver's license, these are considered your legal name. It could be a difference if someone just got married or they have been recently married. And if that is the case and you've updated your Social Security card, we would want to use that legal name. Moving along, when it comes to the section of co-borrower, this is going to be someone else that's going to be on the loan with you or applying with you. This question is only pertaining to married couples. It's not to say if you have a co-signer that they're not also going on the deal or going in on the application. Just means that this application is not meant for two non-married individuals. This application or this question is meant for joint applications, married couples. So if you have a significant other and you're purchasing your first home together and maybe you're engaged, you would select no simply because you're not married. And it does not mean that they're not on the application, just means that your significant other would fill out their own application here in this section. So let's do an example of that. We have a single male with a decimal in his name. And for ease, all right. No co-borrower, because we're just going to do a single person here. How did we hear about us? Pretty self-explanatory. Let's just call it by other. Maybe a friend recommended us. All right. This is very important, guys. Real estate agent name, or do you even have a real estate agent? I say that this is important because there are many, many reasons why a realtor is extremely beneficial to a buyer. Number one, they don't work for a commission up front, meaning they don't go and find you a home and you have to pay them to find that home. And I'm not saying that an agent works for free. Nobody works for free. That would be a bold-faced lie if I even were to say that's the case. But what I mean to retain their services, you as a buyer, For them to help negotiate on your contract, you don't pay them a fee to do so. And it's very, very, very important that you have somebody or have a team in your corner, not only helping you identify the home of your dreams, but help protecting you while procuring that home of your dreams. Many things can come up on a contract. Things can be hidden. There's not just one contract. There are several different forms of contract. Even the builders for new constructions, they have their own set of contracts. And I've seen on a 34-page contract on page 9, like on the 6th paragraph, additional fees or things that a builder was not paying for. And a consumer had no idea about these. So this section here, real estate agent name, or if you have one, there's no right or wrong answer to that. I'm just sharing my strong beliefs of being in this industry for over a decade, why a real estate agent is extremely valuable to you as a first-time home buyer or even a move-up buyer, subsequent buyer. So moving on, listing their name, very important. We need to know who the heck we're reaching out to. Not only just to say thank you to them, but also keep them informed and up to date on you as your buying power as a consumer. We don't divulge personal information such as your credit profile or your income status, anything of that nature. We give the meat and potatoes as to what a real estate agent is looking for and what they need to help find the home of your dreams. An example of that would be how much of an HOA, if applicable, can you guys afford? How much of property taxes is going to be our max threshold? And then obviously the big one is what is our max buying power compared to what kind of program we're doing in down payment. So these are some parameters that a real estate agent is going to be looking for when they're trying to find the home of your dreams. Again, another reason why you'd want to have a real estate agent on your side. Obviously, listing the information, their phone number and email is pretty obvious. The referral name, just list the same real estate agent name if it is a real estate agent. Maybe a real estate agent didn't send you guys over. Maybe it was a friend of family. Just go ahead and list them. That's fine. For this example, we're just going to say that a group or team referred us over. Pretty cool group. And let's just go ahead and list some mock numbers. Oop. Now, some of the red asterisks that you guys see, those are required. So we have to list that information. This section here, you can take the time to read it to yourself. And what essentially this means is we're going to be checking credit profile. It's part of the mortgage process. I'll explain a little bit more about credit through the video, but this just gives us authorization to do so. And checking credit in regards to the mortgage and mortgage only. There's so many different things that are involved with a credit profile, and it's not just score related. It has to do with a couple other different factors, but in a nutshell, this is what this authorization gives us access to confirm credit profiles. So just for video's sake, let's just go ahead and authorize. Privacy policy, please feel free to read through this. I won't do that to you guys on this video, but essentially is we keep all your information private. We don't sell off your information to third-party vendors. This is where you're going to start receiving a bunch of phone calls because you applied for a mortgage. We don't do that. We don't sell off any of your personal information, such as banking information, income information, credit profile information. We don't do that. So feel free to thumb through, but this is what this would represent. And that essentially is your first page. That's just the first page of your application. Moving on to the second page. It's pretty self-explanatory as far as the questions that it's asking, but you as a consumer may not know what I'm looking for. But the drop-down boxes should be able to help answer some of this for us. If you're looking to purchase your very first home for the first time, or maybe you're moving on up, you're going to fall into this bracket. If you're looking for a new build or just trying to build your home from scratch, this would be construction to perm. That's what that represents. Construction simply means that the land has already been purchased and you're looking to do a new construction type of property. No cash out refi. This has to do with existing homeowners looking to refinance their home and not pull any cash out. The opposite of that would be for existing homeowners looking to pull cash out or do some type of debt consolidation. Other could be for maybe a renovation, a home mortgage where you can renovate the home that you're either looking to purchase or that you currently live in. So that could fall under the other section. For the purpose of this video, we're just going to hit purchase. Do you have an executed contract? Meaning, are you already under contract? We would sincerely hope that you're not at the time of filling out this application. However, you may be coming from another lender and already under contract, or may have circumstances that pushed you into another lender, and this is why you're now filling it out. It's quite all right if it's yes or no, but we definitely want to signify, because this is what's going to signify the priority. If you are already under contract, which means you already have a close date that is quickly approaching, has already approached, or needs to be met. So it's important that we list if it's yes or no. For the purpose of this video, we're just going to hit no, because we're not under the gun. And for the purpose of this video, I, myself, Michael Anthony St. Claire, I can do business as far as mortgage planning, mortgage originating, all through the state of Florida. Our company covers a much, much larger scale as far as lending goes. We're actually nationwide. But for this purpose, Michael Anthony St. Claire, my license covers the state of Florida. Beautiful Sunshine State. Now, you'll select your state and the property usage. How do you intend to hold the property? Is this going to be your first home that you're going to be living in every single day? Do you already own a home and you're not going to be living there? Maybe it's in a different location, 40 miles away from your existing primary residence. Maybe you're an investor. You own a couple properties, or maybe this is your first property, but you know you're not going to live in it, but you want to turn some type of profit from it. These are your sections where you would select that. We're going to select primary residence. Number of units. Units in residential financing is from 1 to 4. So a condo, a townhome, or a regular house, also known as a single-family residence, fall under 1 unit. You have seen some type of townhomes where they're right next door to each other, which that is a townhome. That is still 1 unit. A 2-unit, 3-unit, or 4-unit, also known as a duplex, triplex, and quadplex. These are where the property shares one single parcel. They share one single real estate property tax bill in layman's terms. So for the purpose of this video, in most cases, people are trying to purchase 1 unit. But to educate you guys, if you guys wanted to purchase a duplex, triplex, or quadplex, you can. Once you exceed 4 units and you get into 5 units, that is considered commercial. That we do not do. Year built, you may not know when it was built, so you can throw in a mock number. Let's just say I found a home that's in 2015. Purchase price, well, that's kind of the obvious. I'm trying to figure out how much home I can afford, or maybe you already know that number because you've been shopping on Zillow, shopping on Realtor.com, and you found a home that's very, very interesting to you. Regardless of what that answer is, throw in a mock number. It doesn't have to be accurate. Let's just say 250,000. Seems very low in the Lake Nona area, and you can get a lot of home for cheap at 250 in today's market. Loan amount, same scenario. Maybe you don't know how much you're approved for. You have no idea. You can leave that section blank, or you can throw in a mock number. Again, if it does not have a red asterisk next to it, it does not need to be filled out. If it does, it is required. So let's just say maybe we're looking for a $240,000 loan, just to get an idea. And title will be held with what names? If you're married, you'd want to list your spouse. If they're on the mortgage application, it's going to be on there as an obvious. If you're purchasing it with a co-signer, their names will have to be on this section here. It is not required. Most of lenders will fill this out for you, or at least get it knocked out for you, if that makes any sense. How you intend to hold a title, community property, joint tenant, single man, single woman. These are kind of obvious, single man, single woman, the whole 9. If you're holding it with a spouse or a significant other, joint tenants. If you're holding the title as if you're a single person, single man, single woman, that's how you intend to hold title. If you're a married man or married woman, but your significant other or spouse is not on the mortgage application, then you would select married man, married woman. Tenants in common, it would be maybe you're purchasing a home with a parent or a relative, or a friend, and you guys are going to be holding title together. This is for anyone that is either separated or a widowed, man or woman. And then other is really never filled out, but these are your general. So married couple, filling out together, joint tenants. Married couple, but only one person on the application, either or. Single, there you go. Tenants in common, I have a co-signer, and they're either my relative. So for the purpose of this application, let's just go ahead and say married man. Source of down payment. You may want to qualify for a down payment assistance program and you don't know. You may have some type of money saved up in the bank and you want to use some of those funds. This helps illustrate where these funds are coming from and helps illustrate what kind of program on the down payment section that a lender is going to want to be looking for. So whether you have $500 or $500,000 in the bank or in some type of 401k account, just go ahead and list the account. It helps a lender on what documents to be requesting. So let's move to our next page. This is the personal information. As you can see, I want to know your marital status, if you're single, unmarried, or separated. For the purpose of the video, let's say married. Then we're going to use some mock dates. Right? This is where the personal information comes into play. And we're just throwing in date of birth and socials. Number of dependents. If you have any children that are under 18 years old or over 18 and they still live at home or you still claim them as a dependent, you want to list them. If you have a parent that lives with you and they are dependent, you want to list them as well. So you'll list how many you have and their ages. Here, you want to list your home phone number. You can list your home phone number and your cell phone number as the same number. That's quite all right. But this is how a lender is going to be able to get back in contact with you. Your current address. This is important for residency. Every single lender is going to want to know where you have been living for the last 2 years. So when you get to this section of current residence, it's important you list down to the months that you've been there. Not to the day, you can do roundabout months, but it's important that you list the additional addresses of homes that you've lived at. You want to list the city. Like, so an example of that, we are in Lake Nona, but Lake Nona is a part of Orlando. So I wouldn't list Lake Nona, I would list Orlando. State is obvious. Hey. Oh, hello. Comfortable with it, filling it out, that's fine. But at some point it will be filled out. So for the purpose of this application, let's just go ahead and fill this out. Now we get to the employment income. In this section, this is where most people get very confused. Now, if you are 1099 or maybe you're retired or anything of that nature, and you cannot provide your W-2s or pay stubs or tax form because maybe you don't file tax returns, or maybe you don't receive W-2s, or maybe you don't get pay stubs, you would want to hit no. If you just can't for whatever reason, because maybe you don't have that. If you can, then hit yes, because this is what's going to signify a lender on what documents to be requesting. At least it gives an example as far as what to be requesting. Enter employment information. From this section here, we're just going to add in current employment info. Now, if I was retired, I would not be filling out this employment information. We would just list my income, borrower, and if I'm either making income off of alimony or Social Security or retirement, whichever fills out into this section here, that's where you would list it. So again, if you are retired, or maybe you don't file taxes because of how you're just paid, you would want to hit no and just fill out this section. You do not hit the enter employment information. But for the purpose of this video, let's just go ahead and dive into that. So, employer name, the beautiful Homeside Financial, go Homeside. And let's just put in an address. You want to try to list your corporate office. If you know that address readily available, try to list your corporate office because that's where your main employer is going to be found through records. If you don't know that address and you just have maybe your local office or a local branch, that's fine. You can list that too. I'm going to list the city and the state, which isn't obvious. The work phone number is very important because this helps with verification of employment. Now, when you get to the work phone number, it's important not to list your manager's phone number. What a financial institution is looking for, they're looking for an HR department, someone that can help answer or verify employment. And by verifying, they want to verify your status there, how long you've been there, and also break down your income. So it's important to put a good phone number there for your lender so that way they know the appropriate people to call. Now you guys may have noticed I've been using the same phone number over and over again because it's just for the purpose of video. Business type, you can put financial. No, I'm joking. But you want to put your position because it's just going to help for completing an application correctly. There we go. If you're self-employed, or maybe you have a regular day job and you also have a side biz as well too, if you're claiming this income on your taxes, on your tax returns, or we're using any income from that side business, you'd want to hit yes. If you don't have a regular employer and you're just 100% self-employed, entrepreneur, what have you, then you'd want to hit yes. If you're also self-employed and you W-2 yourself, then you'd want to go up to this section and fill it out like a regular, like a regular employee. Now, how long have you been employed? This is extremely important, extremely important. Every single lender is looking for a 2-year history. They want to know where you've been for the last 2 years. Just like living, they want to know where you've been working for the last 2 years. So if you've only been there for maybe 1 year, all right, that's fine. They want to know where you were before that. If you've had, maybe you work at one place for 1 year and you go to the next job, if it's a change of industry, meaning you go from I was a bartender to I'm now a dentist, that's going to raise a red flag. So there has to be additional strength in your application. We don't have to list that. That's where the experience and expertise comes from your loan officer. But I'm just preparing whomever is watching this video or filling out an application that when you're filling out your employment history, if you went from college, being in college, to having your first job, that's fine, but know that they're going to want to see college transcripts. So be prepared to answer those questions. They're looking for a 2-year history, what you have been doing for the last 2 years. So that same example, $25 an hour times 40 hours per week. This would be considered full-time, equals my weekly pay. I'll take my weekly pay, multiply that by 52 weeks, and this will give me my annual income. I take my annual income, divide by 12, and this will give me my total gross income. And there you have it, guys. That's exactly how it is. So live example, right? $25 an hour times 40 equals what? $1,000. Take $1,000 times 52, and that equals 52,000. 52,000 divided by 12 equals $4,333.33, and that would be my gross monthly income. Right? So go ahead and pause that. You guys can take a screenshot of that. You kind of figure out how to calculate your income. Now on the bonus, as I mentioned, let's say in 2015 you made $20,000 in bonus income, and in 2016 you had a great year and maybe you made $50,000 in bonus income and or commissions, however you want to label it. They're going to combine both years. $70K bonus income. They're going to take $70K, divide by 12, excuse me, divide by 24, because it's a 2-year average. And $2,916.67 is going to be the gross monthly income that they'll use for commissions. So if you guys want to pause that and use that formula, feel free to do so. We're going to. All right, so now that we have our income broken down, now we can move on to the next section. Now, as I mentioned before, this is listing one of our employers. If I had additional income, maybe I was receiving alimony or child support, this is where I would list that I'm receiving this income. If you are paying alimony or child support, there will be a section of where to fill this out, and that's going to be next for us. So let's go ahead and move on to our next section. Here's where you're going to list your assets and liabilities. Now, when they're asking for assets, a lot of people want to list their automobile. And I get it. I understand. It is an asset to some degree. However, for lending purposes, the assets that they're referring to are liquid assets. Liquid assets being 401ks, IRAs, annuities, stocks, bonds, and your most used and common use checking and savings accounts. These are the assets that a financial institution is looking for. When you list your automobile, you can list it on your application, but it just opens the door for more questions. And 9 times out of 10, a mortgage loan originator is just removing it off your application. So to fill this out correctly, you want to enter in your asset amount. This is important to a lender because it helps them identify if you're able to use your own funds for down payment and or closing costs, or if you're going to need some type of assistance. It's important to be transparent with this because your lender is going to be shopping for the best program that fits your goals and fits your needs. So if there is none here, then just hit cancel, or if there are some there, you want to list them there. For the purpose of this video, let's just say we're talking about down payment assistance, and I don't have meals. We discussed that before. I would not recommend listing them, but you can if we are going to be using them for some type of asset in the transaction. Life insurance, you can use this as well too if it's liquid, or if we're going to be using it to add more weight and value to the application. For the purposes of this video, we're not going to be filling any of this out. Cash, meaning if you have mattress money, if you have money in the safe, if you have maybe a bond that you can cash out, this is where you want to list these dollar amounts. Now, moving on to expenses. Where you currently pay, how much you pay in rent, it's important Maybe you live with your parents, and maybe they're not charging you rent, but maybe you pay for some utilities that are around the house. List some type of number. Maybe you spend $500 a month. If that's the case, then list that number. It helps your lender identify what your payment shock will be. Because if you have very, very low rent and you're going into buying a home and you're doing it by yourself, you may be subject to payment shock, which means how much you're used to paying in rent versus now owning a home would be significantly different. So a lender, based on their fiduciary duty, they had to be able to identify that to give you the best possible mortgage options. If that's not the scenario for you and you do flat out pay rent, then list what your rent amount is. Real estate details. This is important. Enter real estate information is important for those that own additional properties. So if you own a couple different homes and you either collect rents on them or they're second homes, this is the section of where you're going to want to fill it out. So you'd open up this section, another screen will open, the property addresses, if there's any rents or any mortgages that are associated to them, this is where you'd want to list all this information. Real estate details. And for the purpose of this video, we're going to hit no, just because it's more information that needs to be filled out. But as I mentioned in our previous screen, I mentioned about child support and alimony. And if you're the one paying those, you're the debtor, the one paying the debt, this is the section of where you'd want to fill it out. How much you pay per month and how many months it's left for. If you have any type of job-related expenses such as travel and your employer does not reimburse you for these, you'd want to select this here. So maybe you have a gas expense or travel expense because your office is inside your car. Maybe you're driving products around your area or even the state. If you have those expenses and it is on your tax returns, that is known as unreimbursed business expenses. If you have those type of expenses, it's important to try to identify them. You don't need to get down to the penny as far as how much they are monthly, because maybe they change and fluctuate, but it's at least important to bring that to the attention of your financial institution. In over a decade I've been doing mortgages, I have seen time over time, this little section right here kill a deal because a loan officer or lender did not know, did not ask, or maybe a buyer was unaware that those had to be mentioned. So you heard it here live, you heard it now, that it's important to identify if you have any unreimbursed business expenses. And if you're unaware if you have these, look on your tax returns. It's going to say that for you. You'll find that inside of your schedules. Please feel free to reach out to your accountant or reach out to myself directly, and I'll help you point out if you do have any unreimbursed business expenses. And this is our liability section, assets and liabilities. Moving on and almost to the home stretch, this is important in the event that you had any foreclosures, bankruptcies, short sales in the past. Not just this section, but key sections answered yes or no could trigger either a turn down or additional documents that are needed. So if you had a bankruptcy in the last 7 years, it's not going to cause a denial. It's not going to mean that you can't get a mortgage. Hit yes, because a lender is going to have to request certain documents to help support that bankruptcy. If there's any judgments against you, your lender will see that on your credit report. If you know of any, hit yes. It can still be addressed through the mortgage application. This is a big one. If you foreclosed on any properties in the last 7 years, yes or no. This is important because that foreclosure may not have sold that property yet, and your clock to start for a home approval again is contingent on when that property sold. So not to dive into foreclosures, but it's important that you hit yes or no on these. And the same for any of these questions. They must be filled out to help your lender know how to structure your file accordingly. If you are here on a visa, work visa, or anything of that nature, or you have citizenship, these are the sections that you want to fill out yes or no. You can still get a home mortgage. It's not going to stop anybody from it. It just, again, helps your lender structure your loan accordingly based on the product and programs that you select from yes or no on your declarations. If you've owned a home in the last 3 years, you are considered a non-first-time home buyer. So if you haven't owned a home for the last 4 years, you are now a first-time home buyer again. So that's why they really want to know, because it helps a lender identify if you're going to be able to qualify for first-time home buyer programs and products. So the yes and no sections are important. So for the purpose of this video, no, 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 yes, no. Yes, I intend to occupy this home as my primary, and no, because I'm a first-time home buyer. Next. And I consent to basically send you confirmation, disclosures, compliance documents via e-disclosure. So going forward, once you're in process with us, we will communicate with you on a secure level, not that this isn't, but as far as document-wise, estimate-wise, things of that nature will be sent through a portal. And this consent gives us the authorization to send you that information. In 2017, technology, as I mentioned, is prevalent, and this is a great tool as far as how to get information to you right away without having to wait for the mail or stand by a fax machine. So e-consent gives us the ability to send you documents to review for your review and to have them autographed. Know this, that once you hit I agree, what happens is you have a summary that's going to pop up next, and this summary is going to give you the option to submit. When you submit, this is not a commitment to a lender. There's no fee. As you guys noticed, there has been zero screen that has popped up asking for a credit card or payment information, none of that nature. Most lenders are like that. It's not to say that not all of them are like that, unfortunately. Us here at Homeside Financial, we won't charge you that, but know that when you hit submit, you're not committed to us. You're not committed to us as a lender. You still have the option to come and go as you please. The commitment that you're setting is the commitment to yourself and your family to start working on the financial options that are going to best suit you and your family. And it's my job to provide you guys with sound, great information to make smart financial decisions. So let's go ahead and hit submit, and let's find out what happens next. And there you go. You'll get your thank you letter for starting the application. You'll receive an email from us that your application has been submitted, and you'll get some good content in regards to that. You'll also be able to have now your own user account, the whole nine. So there you go, guys. We all just filled out our application together. So there you guys go. That is an in-depth look on how to fill out a mortgage application correctly. I hope you guys got a lot of great information about this. Know that filling an application is never ever going to be this long. It's usually about 4 to 5 minutes. But keep in mind, I myself, Homeside Financial, we got your back. We'll be here to answer any questions that you may have. And in fact, you can call or text me direct with any snags or questions you may have along the application process. My phone number is area code 407-780-0741. I look forward to hearing from you. I look forward to speaking with you. And ultimately, I look forward to help changing your life. Thank you so much for watching this video. Please share with those that you would find a benefit from watching this video. And have a phenomenal, phenomenal day.